Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we saw yesterday was a move to the 100-day exponential moving average that was rejected right around the 83.5 area. Then we got into the afternoon where we were in a pure trend down market. The AD accelerated, got past negative 450, and really stayed there. Got as high as in the 480s, might even have hit 490. And typically when that happens, you close pretty much at or near the lows, which we did down at 2047.25, which was within a handle of testing the purple line there, the 200-day exponential moving average. We're getting a bounce here. We've bounced as high as 69. We've had trouble getting through 69 in the Globex. We'll have to see how that plays out in the regular session. It was ripe to buy that weakness yesterday. We waited until we got into Globex. I don't like buying that stuff in the regular session. It's just way too much like knife catching for me. So we're currently long 52. We've taken some profits, and we're just kind of letting it work. I fully expect this rally to fail. We're in a sell rallies market. I think expecting a V from here is, pretty unreasonable. Although you never know what kind of news you're going to get. But chances are, there's a lot of areas that can be tested. Let's take a look at a 15-minute chart. Okay, so here's a 15-minute chart. You've got daily pivot here coming into the 61 area. You got the daily lower band, which is 59.20. We moved to 69. We came back to test the daily lower band and establish that as support. That's good news if you're a bull. What you didn't want to see happen was when we reached the lower band to see that act as fairly strong resistance, then you get into what I call a channel day, where we spend time between the third standard deviation lower band and the second standard deviation lower band. We're on a band ride by definition. We've engaged the band on multiple days. The bulls aren't going to be able to avoid that until they can go a day without engaging the lower band and break above the prior day high. So, they've got their work cut out for them there. As far as areas that we could rally to, you can do, 69 is going to be key. If you get over 69, you start to look at, 75. You've got 83 from yesterday. Then you get into some really big areas. You've got the pre-Fed price up at 84.5. You got the daily mid-band up at 93.5. Then you've got twin pivots, longer-term pivots, the weekly pivot and the monthly pivot, 99 to 2101. I think that's a bridge way too far. Okay. I would expect the bears to get involved, really not much later than, the 75 area in order to push back on this. That's assuming that 69 doesn't just hold from here. On the downside, they're going to have to break back below the 59 to 61 area and go back and challenge the lows from the prior day. If you're a bear, you absolutely want to continue to make a lower low each day. Now, the majority of this is going to be dictated by the news cycle, depending on, the flow of news. In the regular session yesterday, there really wasn't much news. There was very little news, which I think was a function of a hangover, from all the news on Sunday night. I think today you should probably see, and I think we've seen a little bit more regular flow of news coming out of Greece. So watch 69, watch 59 to 61 on the downside, then watch 75, then watch 47 with a look at, the 50-51 area, depending on which way it breaks. But we continue to be ultimately in sell rallies mode. Okay, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.